welcome to Prime Property, your weekly real estate reckoner. I'm Nayantara Rai and this is what we have on the show today. It's the biggest deal of 2013. Diamond merchant Dilip Lakhi outbids other heavyweights to bag the iconic Cadbury House in South Bombay's Pedar Road for a jaw-dropping 350 crore rupees. Dilip Lakhi will use the chocolate maker's 60-year-old headquarters for residential purposes. Our team in London reports the RBI ban hasn't deterred Indians from buying properties. In August, the central bank disallowed Indians from investing in real estate overseas. Knight Frank says this is still an option as long as it's for end use, but as interested buyers are in wait and watch mode. We get BOP to answer your queries on Property Doctor. 2013 will go down as the year marquee properties were sold in Bombay. From the iconic Cadbury House in Pedar Road that's been the chocolate maker's headquarters for almost 6 decades to the 40-year-old Express Towers in Nariman Point that had been commissioned by the legendary Ramnath Goenka. At the beginning of 2013, no one could have imagined the year would end with new owners at two of Bombay's biggest landmarks. But that's what happens in an economic slowdown. Prime properties change hands. Manasi Gilani has all the details from Bombay's Deal Straight.
Cadbury House has finally found its new owner. The iconic Cadbury House, located in the heart of South Bombay, has a new owner. It's been sold for a jaw-dropping rupees 350 crore to a diamond merchant, Dilip Lakhi. Cadbury House is spread over 1.1-acre land with a saleable area of about 62,000 square foot. So at a declared price of rupees 350 crore, Dilip Lakhi is paying almost 57,000 per square foot. Experts say this is in line with today's market rates. The seller is the Indian subsidiary of Mondelez International, earlier known as Kraft Foods. Cadbury House had been the company's headquarters for over 50 years. The location is unbeatable. Cadbury House stands in Mahalakshmi, in close proximity to Prime Altamount Road and at the cusp of Worli and the Sea Link. Cadbury House will be given an extended lease of about 8 to 9 months to completely vacate the premise, after which Dilip Lakhi takes over. The diamond trader had to outbid some of city's mightiest to back this gem of the property. Developers like Lodha, Oberoi, Orbit Corp, Kalpataru were all eyeing this solitaire. Mumbai's property market is reeling under immense pressure, and that's why these developers decided to opt for a more cautious stance. Also, Dilip Lakhi is not viewing the Cadbury House as an investment opportunity. He's decided to pay top dollar for self-consumption. The last big deal in Mumbai was in April 2012. That's when Ajay Piramal's Piramal Realty paid a whopping 452 crore to HUL for the Galita property in Worli.
And there's yet another deal brewing in Mumbai, and this one's the iconic Express Towers at Nariman Point for a whopping 900 crore rupees. PE giant Blackstone, along with its portfolio company Panchal Realty from Pune, are believed to be on track to buy out the existing owners, that's the Express Group and ICICI Ventures. Interestingly, Blackstone is headquartered out of Express Towers and so are its competitors Cobra Pincus and General Atlantic. In Mumbai, Manasi Gilani.
Indian millionaires are shelling out big bucks for a London address. But this goes beyond bragging rights, with the British capital proving to be an investment hotspot where property provides massive returns. It looks like the RBI's rules to clamp down on buying property abroad are proving to be ineffective. Here's a ground report. Grosvenor Square is as prime gets in London, between Oxford Street on one side and Hyde Park on the other. With the American Embassy on one side of the square, the Canadian High Commission is on the other. The huge and stylish Block 15 here is home to no one but Indian millionaires. Another 4-bedroom flat here just got sold for £16 million. That's 160 crore rupees. Indians are buying all over London. Here on Bishop's Avenue, called Millionaires Row, now perhaps Billionaires Row. All over central London, Indians are paying millions for just a flat.
Well, we found, being India's largest auction house, we had clients coming to London and they were interested in buying London property, as a second home for them. And we decided to produce a report as well as start a service called Prime London to help Indians buy property here because of its peculiarities in the London market, to help them, guide them, find them the property.
Property in London means more than a home away from home. It's a way to place hard currency.
a lot of people, when they're buying properties, are looking more for the capital appreciation and actually the safe haven status, so you're diversifying your geopolitical risk, but also currency risk.
It's not just the big millionaires that are buying up in central London. Many with family ties in Britain are investing in simpler properties and developments, such as in Indian-dominated areas like Wembley.
In the prime markets tend to be able to access funds in sterling, so the exchange rate controls are not of so much effect in the prime markets. In the lower markets, it may well be that these constraints on currency export will have an impact.
It's this lot that has been affected by the RBI ban on the transfer of money abroad for investing in property. At the top end, the RBI ruling seems to have done nothing to stop the flow.
Britain may not welcome foreigners, but it welcomes their money. They don't want to know where it comes from, and the Indian government doesn't seem to want to know where it goes from. With Karma Wangde, Sanjay Suri in London.
We decided to dig deeper. How is all this happening when the RBI in mid-August had banned Indians from repatriating funds to buy properties overseas? Till that ban, the central bank had allowed repatriation of $200,000 annually for buying real estate abroad. And this had become a trend that was on the uptick. Knight Frank had told Prime Property this June, that's roughly 2.5 months before the RBI ban, that buyer queries had gone up from 4 in 2011 to about 20 in a month. In a February 2013 report, Knight Frank had said Indians were among the top 10 buyers of residential real estate in central London and occupied over 2% of such new properties in London in 2012. I asked this property consultant if the RBI had opened a new window of opportunity. Legal experts have concluded properties can be purchased as long as it's for genuine use and Indians don't earn any rental income from it. Experts say business arms of HNIs have been following that practice.
See, the RBI has debarred any purchase, from money being taken out of India into properties outside. But they've given a small window of opportunity for domestic Indians that they will allow any kind of genuine purchases for end use. So there are a lot of people who already have business interests outside of India. They will have interests where their family members will be studying outside of India. These can be termed as genuine needs, and individuals can actually apply to the RBI and get approvals and permissions for investments outside.
So if interested buyers, your clients, approach the RBI to get approvals to buy these properties overseas?
So people have been approaching the Reserve Bank of India to get an understanding of what basically constitutes genuine purchases and whether their requirements would constitute as that. So people have been approaching there. However, most of the clients have taken a very cautionary approach in terms of whether they would buy or not. Many of our clients have been, NRIs per se. There is no restriction on NRIs buying in those localities. Now, NRI technically is a guy who would be outside of India for more than 181 days. So these are guys who travel to India frequently and have through us looked at properties outside. So we've seen NRIs continue to look at various markets across the world. But domestic Indians have been few and far between only. Obviously, they need to justify the need per se. They need to justify the source of funds. So therefore, as I said, very few people have actually looked at that opportunity. Where there is an absolute need for buying property either for their children, for education purposes, or for their business needs, for staying, for their executives to stay. People have looked at that. So the RBI obviously has and will take an approach which is that they will allow such purchases if they feel satisfied that there is a genuine need there.
But Mr. Zaidi, when I read the RBI circular in mid-August, nowhere did it say that repatriation of funds would be allowed for genuine end use. There was no such caveat that Indians could buy as long as it's not for investment purposes or to sublet or to earn a rental income. Has there been a subsequent clarification?
See, there is no subsequent circular which has come out. We're talking about the same circular which came out in mid-August, where they have very specifically mentioned that that they would debar purchases from domestic Indians outside, but people for genuine needs can approach them. So the same circular does talk about the opportunity there for genuine purchases.
Mrs. Reddy, you've also said that many of your NRI clients are buying properties overseas. So in a sense, you're telling me that NRIs are allowed to repatriate funds for real estate.
See, the restriction is on taking money out of India. So, to be able to justify why you're taking money out, so if they have money in repatriable accounts, they're obviously free to do that. But if they have money in non-resident ordinary accounts, the NRO accounts, that is difficult to take out. So if they have money in repatriable accounts, as I said, which they brought from outside, then that's not a problem. There's no questions asked in terms of what they're taking it back for. Obviously, there will be some reporting requirements where they will have to say why they take it out, but there won't be any restrictions on the purpose for which they're taking it out. So NRIs, if they have money outside, obviously they can use it for wherever they want to invest into. If they have money in India in repatriable accounts, then that is also not a problem for them.
So our ground report in London shows Indians are buying properties overseas, whereas Knight Frank says buyers are in wait and watch mode. The RBI ban had been a temporary one, and HNIs are hoping it will be reversed soon. But that might be some time away, as the rupee has again started showing signs of weakness. On that note, we're going to slip into a short break, but stay tuned. On the other side, BOP answers all your queries on Property Doctor.